Hello guys, glad to have you on board again today. We'll start as usual with the Bitcoin, who has worked its way slightly higher than the target I've been taking my profits on yesterday, which was the 61.8% Fibonacci retracement of the previous daily bearish impulse. So as I explained in yesterday's video, and I'm not going to say that once again and explain that, we have a video that explains this pretty well. So profit taking has been made. I think right now we're just waiting for some kind of retracements. So I'm not going to talk about BTC that much today. I invite you guys, if you haven't already, to have a look at yesterday's video published. It's the one that you'll find right before in the YouTube channel. So if you don't have it, it's pretty easy. I mean, you can just get that by getting in here. It's this one. Yes, it's that one. It's called educative content validation and end of BTC scenarios. You should be able to find this one pretty easy. So moving on, waiting for the Bitcoin to start putting some retracement structure and consolidation thing in order to see if I'm buying again in near the support areas or not. I think we might just work our way into the DOM zone. I mean, if we consider this as being a DOM zone, this is where you have the 38.2% retracement. This is where you got a 61.8. So normally we should oscillate in between those two. We've got a median support in here, which is 7,800, which is an important level. Again, remember, this is the one we've been talking about. It's the level that we generally now break in a first intention, and then we generally make some kind of pullback out of it. And I forecast the price to do just that right now. I mean, just slowly grinding its way down back to that level and see if we can buy, if I can or want to buy that again, just to get to eventually have one more bullish impulse to eventually targets the higher retracements, which may be near 76.4 and eventually the 9,000s. So we'll see about that. If there is still some bullish potential, I'm ready to take advantage of it, but actually right now I think the best scenario is just to wait for further informations, and this is what I just done. So Ethereum has been managed to make a pretty nice daily candle close yesterday. We'll see if this is keep on going today, or if Bitcoin retracement is just making Ethereum breaking that support. The one thing is clear to me is that if we ever get back there, it's end of the game. And for, as I've been buying Ethereum and IOTA as well, when I bought BTC back then, I think I took pretty nice gain on the Bitcoin, but nothing close to that on the Ethereum and IOTA. And I think if those two had to fall again, I don't want to be part of it anymore. I don't think the market should go there. Might be just retracing back, testing that overlapping support. But I think at some point we should head to this level up here regarding Ethereum, which is 568, or approximately, at least consider this as a price area. I think this is where we might be heading, and we might be just building a wave 1, 2, 3. I want the overlap on wave 4, and if we can manage to hold that support and build up our way up afterwards, I think the Ethereum, for some reasons, could have an extended wave 5 structure to head brutally to that resistance. Remember that wave 5 extended is a structure that generally causes V-top structure. So you don't want to remain a buyer too long, and remember that whenever we enter that price area, you want to take your profits pretty quickly. So that's all I'm saying. It's either we get back to that support, and as a bullish, I don't want to remain a buyer of this. I'm just going to take my gains and walk away and wait to have better prices to buy eventually cheaper afterwards. Same thing goes for IOTA, and that's basically all I have to say regarding the cryptocurrency market. If we have to break down those supports, same thing goes for IOTA. We've already been testing the lower prices, so we have no reasons to go lower than that. If we're going lower than this, I'm simply out, which means the bears are really in control. But right now, I think we're just trying. It doesn't look like a bearish, trendy kind of price action to me. All it looks like is more like a rangy structure in which the bears are in control right now, but I would like to see them failing at some point to see some bull strength. So we'll see about that. But if the bears managing to hold these things, and if we cannot manage to break a bearish signal at some point, or at least to break a bearish cycle, well, we might just keep on pushing to the downside until we trigger all the stop losses. If that was the case, then this is the next price that I got interest into regarding IOTA. We need to use logarithmic scales in here. You know, I'm not a big fan of those, but it's just to have some viewing out of the price. I mean, this is really low pricing, and as you can see, it really is changing a lot, the pricing, if you're having a look at it this way. It gives you a better viewing out of the potential support areas you could have to test. And as you can see, this is where the major support is, and we haven't tested that price yet, which suggests that for some reasons we might still need to go there. So this is one of the many reasons that suggest that we could go slightly lower regarding IOTA. I wouldn't necessarily be a big of a surprise to me. So I'm just going to try to build up. I don't know if it's going to work out with the cryptocurrencies. Yes, it is. Okay, perfectly. So we got one major support in here to eventually get to buy. It's 0.56. So as you can see, it's pretty lower than the current pricings. You would expect a 40% drop. So I'm not ready to take that 40% drop on equity. So I basically got out, get out, and just buy that area afterwards. It's much better than the buy and hold. I mean, if this is where we're going, you don't want to be a buy and holder of $1 per IOTA if you have opportunity to buy it twice divided by 2. I mean, 50% off is definitely something I'd like to buy, but or eventually even lower. I mean, if no signals are pulling in here, I'm not going to buy anything. But if we're getting in here and find some bullish demand, I'm ready to get in and jump into the boat as well. So we're going to do the same exercise right above with IOTA and do this thing with the previous support, and we'll see if I've done my job well or not. I haven't done it well, so now it's time to some kind of adjusting things. So this is where you want to buy with a limit order. So this is where you can buy with limits but put a stop loss in here. If the market's going there, you're out. And this is a second price to eventually consider testing as a support, as a first support. But if you want to buy this one, I suggest wait for the market to get there, rebounds on the first one, and try to buy some kind of divergence, intraday divergence, to eventually take this one, which is 0.7273 dollars per IOTA, and to me it seems like a reliable price to get. Okay, so basically waiting to see how this thing works out. I mean, if this is a wave 1 and this is possible and this is just a wave 2, then we should have a wave 3, big nice wave 3 along the way. If I'm wrong, this is still an ongoing bearish market, and this is wave 1, 2, 3, then we're building wave 4 to get to wave 5, which means we're going to go lower and we're going to take down stop losses. So really needs to be patient to do this with a method, with a mindset, and you really want to do this smartly. So trade smart, wait to have clean signals if you want to get in. Don't rush things. Obviously, don't FOMO, don't anything like that. Okay, so it's just, I think there was a speculative timing in here, and as you can see, the Bitcoin has been working that pretty well, not the other two. So we'll see how this plays out. If for some reasons the other two might be just waking up in a few hours or days, or just falling apart because the timing wasn't there. And if the timing wasn't there, then I'd like to take a stop. It will be a gain, a stop gain, because IOTA have been having great prices, so I don't think I'm going to take a loss regarding IOTA, neither with Ethereum. So it's just going to be exiting at the entry price to just buy at lower and better prices afterwards. That's it for the cryptocurrency sector. So it's just basically wait and see kind of approach right now. The altcoins are pretty much under pressure recently, and we'll see which one of those two, the strongest altcoins or the Bitcoins, is going to take the trend over the next few days. Now regarding the classical and other market classes, We've got not that big of a catalyst today. We just had a catalyst this night with the inflation, core inflation, with AUD economy, and the rest of that day is not that big of a deal. We have the home sales, could be a market mover for some reasons, but I think right now Wall Street's just focusing on the release, on the earnings release, and today we've got pretty much big names. We've got AMD publishing after the market close. We've got Boeing publishing right before the market close, so this one will be a game changer today. You know, I've been watching for this one for a long time, so eventually something about to trigger with Boeing today. Having a quick look at this one, got Facebook publishing after the candle, after the close. We've got Visa. That's going to be a game changer to me. But I will have a look at those three, AMD, Boeing, and Facebook. We've also got General Motors to give us some clues about what we should expect with Tesla, for example, but not necessarily going to be changing everything in here. Okay? So have a look at AMD, and first of all, having a look at Boeing before the ringing bell at the open. Okay? These, I think, will be the only market catalyst today. I think the home sales are just going to be second stage kind of catalyst that the market doesn't really care about right now. It's all about earnings. I mean, actually, Wall Street's been taking all the fuel they could have everywhere. They've been flushing all the risks, taking all the good news, just avoiding all the bad news, and just focusing right now on just keep on doing this. I mean, it's just earnings. All we care is to have the big names not failing. That's all the Wall Street's counting on. I mean, Wall Street's nothing close to being rational right now. It's just being the most irrational we can, as long as we can hold it. So the question is, can we hold it one more quarter, or is it already too late? And I think that we're already too late, but no one's ever seen that right now. So we're going to talk about the equities right now, but first I think we're going to have a look at the forex market, which is really a lot more interesting right now. And I think this is where the game's at play, and where the players actually are putting their positions. They're kind of being in a watch and see situations regarding the equities. They're just trying to figure out if they should hold the long positions or just take them out, because we might be entering recessions throughout the next few quarters. So this is what all investors are trying to figure out. Are we about to head towards recessions, and should we then lower the leverage even though taking the entire profits off the table, or should we keep it ongoing for one extended year? I mean, is it 2018 going to be a good year in the end, and then we should keep on pushing to higher gains in 2019, in which selling will be absolutely necessary? So it's just that question right now that the investors have in their heads. Is it already time to get out, or should we just keep on extending to 2019, in which selling will be the only option? We got the EURJPY is doing pretty well. So for now, GBP/USD has been invalidating that bearish breakout. So this is a bullish signal, actually, the one I've been searching for. They've been trying to break down. They've been chasing the stop losses, failing right at the first available support, and now we're riding back to resistances. And I expect the price to ride higher than that afterwards. So GBP/USD, it's a validated scenario for now. Sorry, it's a pending validation scenario for now. I think I'm just waiting for the price to reach out to that resistance, finding some kind of bearish demand, and then flush that demand out to just exit that trend channel. As long as we don't have it, I think it's too early to consider anything close to being bullish. So I think we can make wave 1, 2, 3, wave 4 overlapping, and what I want then is a wave 5 extended. Okay, so in terms of kind of scenario, in kind of structure, price structure, I'd like to see this is basically what I'd like to have in the next forthcoming days. Okay, getting to the market, to the channel stop, working our way to retrace approximately 38 to 40%, and then getting higher by breaking that up, and this is where I'll get the validation. Okay, remember, as always, what I'm looking for is to find the extended wave. Okay, the extended wave is the one that is breaking resistances, the one that is holding for longer, and the one that has the lowest retracement inside that wave. This is where everyone is thinking the same thing and thinking the same way, and this is what I'm searching for. So wave 1 not necessarily interesting to me. This is the speculative wave, the one I've been buying, but I'm not going to reinforce wave 3 as we'll probably have wave 5 extended. Okay, so I'm going to wait for wave 5 to get fully leveraged on GBP USD. For now, I stick to speculative leverage. EURJPY, same thing in here. We're trying to find a support area. I think two options: either we just work that at the horizontal pricing, which is kind of ranging flat before getting lower levels, or we just have to create a pullback for some reasons. And getting there, typically wave 2 pullbacks get to 61 to 76.4% retracement, but I hardly see the market being able to do this. So to be honest, I clearly think that this is wave 1 that we just built in here, that we're just going to range and flat the range to the wave 2 to get into a big nice wave 3, 4 and 5 to go on. Okay, so still plenty of gains to make in the end, but I think we're not going to retrace that big on the EURJPY. I think it's already too late. Everybody has been seeing that the trend is bearish, so I'm just basically waiting for the range to build up and then break down. USD/GPY can be a vessel for your trades. It's up to you. You pick either the EURJPY or the USD/GPY. I think EURUSD in the time frame the trading scenario will trigger is not going to be a game changer. We'll probably have the euro dollar at the same price we currently are, which means either EURJPY or USD/GPY is going to surrender the same gains in the end when we'll get to the targets, or approximately the same. USD CAD might be eventually triggering an important scenario. As you can see, we've had oil catalyst today at 4:30 p.m. In my local time frame, so it's going to be 11 a.m. for US time zone. So whenever we get this, I think the USD CAD could trigger something pretty interesting to me. In a daily chart perspective, this is a scenario I've been waiting for quite some time. We've been failing in here on an uninteresting level, so we're really going to have two options with the USD CAD. It's either we're going to have a bullish outcome in here to find for wave 4 termination, and this would just be a sub wave 4 to get into wave 5, and I'll be ready to get that trade in here at pretty decent prices. The second option is that we would already be nearing the end of that ongoing scenario, and if that's going to be the case, I think a tiny little breakout trade could be made right here just to get to target this. It's a 1-to-1 risk-reward ratio, so basically entering in here, putting a stop loss right here, and just taking the profits at a 1-to-1 ratio right on that support. You see lots of volume is at play in here. If you just put a volume profile, you see it is pretty clearly visible range, so that it's just a few moments to plot. Why isn't it? Histogram is too large. Okay, yes, so we're going to do number of rows. I want to have 500 rows, and I think the total volume is more than enough. Yes, okay. So this is what we have. I mean, and as you can see, this is where we got the major volume node. So it's either that area is going to extract to find the higher pricings area, or the higher demand. I mean, this is where you got demand, and this is where you got the other demand. So this is where you got bullish demand, this is where you got bearish demand, and the price is going to get into one of those two areas. So either I'm going to try trading this one and paying for my stop loss pretty quickly, and then let go for a potential target number 2 at lower prices. Second option is just basically that market isn't yet bearish. We're going to have to get to the red area first, and if we go there, I'm ready to take a short entry. But it might require some kind of patience anyway. So I'm going to put 2 alerts. One at the sorry, I already have ones actually. So okay, and I'm going to delete this one. Okay, so it's either we break the previous highs, and then I'm going to forecast a wave 4 to terminate higher. Second option is basically for us to already being terminated and heading toward deeper retracements. USD CNH is going to be a new scenario to me. I've just been taking a bearish entry. If you're having a look at this on a daily chart perspective, I think that this is what's at play. We could have a deep retracement. I think no questions asked that this thing is bullish right now, but generally we do in two waves, into ranges, and this is range price action. You can see it's bullish. No, it's not even range actually, it's bullish. But we've made a pretty nice and decent bullish impulse. I think we could have a deep pullback. Probably expecting 61% retracement out here, just to get back into buying afterwards. So as you can see, I would be doing a wave 2 target. So getting in there, probably buying either a 76.4 or 61% retracement. It's hard to tell at that point. We still have to figure out the first bearish impulse and see what the consolidation look like. As usual, I've been forecasting ABC, but I have no clue about what the consolidation may look like. We could eventually have one more bearish drop, extended bearish drop, and then just a triangle. I mean, consolidating regarding Elliott waves can pull out many different situations. So I'm taking the most common one, which is ABC retracement, but could be very different in the end. So it's just a speculative consolidation scenario, but I think at some point we could have something usable in here. So the scenario is just that we've got, as you can see in the daily chart time frame, what I'm trading is the fact that we've made the bullish trend. Okay, no questions asked. This is bullish trend, so all we can expect right here is a bearish retracement. So don't be too aggressive regarding the trades you might be taking. I think that this is target number 1, 23.6% retracement. So this is where I think I'll trigger the taking profit number 1. Okay, because this is generally a target to all of those who are targeting retracement. So first target will be right here. I think second target to me will be an extended target to eventually trigger, eventually holding this thing toward the end as a target number 2, approximately here in 61% retracement. See how this plays out. I mean, or I can just take a single trade heading there to there, or eventually target 38.2% retracement. I mean, this could be a reliable situation in here. This is where we got 23.6, but we can also add 0.382. And this could be an interesting level. I mean, for some reasons we could go there and then find and search for target number 2 at 38.2 for the wave A, for example. Okay, so this kind of sounds like an interesting scenario to me. I've been sorting already. The stop loss is set right here with an invalidation alert in here. It means as long as the price doesn't reach out to the market top, I'm nothing to be close to worried about. And I'm not triggering stop losses here either. It's just that right here I will assess how the price has been reacting and seeing if I need to trigger the stop loss manually, or if I can still let it right here and just see if the market is just trying to chase that other resistance we have up here. Okay, so be aware of this. This is a counter trend scenario. All I'm triggering right here are for Fibonacci retracements. I'm not putting a lot of risk in here. It's very tiny leverage, as this is counter trendy. Okay, I also got a scenario, a brand new scenarios ongoing on USD MXN. I think this one is about to trigger pretty soon. I'm expecting this to break down those levels and get into that area. So I'm going to show you how I've been building that scenario. Okay, so first we have a look at the daily chart, which is going to be the context in that trading scenario. So to me, the context that we're clearly having bullish trend on that asset, which means we should move on with 5 bullish impulses. So you can see the trend is really in place for a long time, so we should keep on doing this, I think. So the question is, how long can this hold? Of course there will be an invalidation level, as always there is, but as you can see, I think we have high probability to find some bulls in there. So the target is just taking care of finding a wave 4, sub wave 4, sorry. It's trying to find a sub wave 4. We've already had the AB, so we're in the final stages trying to find the C point of that consolidation. We can clearly see that we're impulsing in here, and we've got overlapping, which means we're in structural wave 1, 2, 3, 4, with a 4 entering into wave 1 territory, which means we should expect a wave 5, approximately 127%. of wave 3 at the wave 4 point. So the target will be right here, and the objective is just to go slightly higher than that. So we have to break that level to build a wave 5, and for now all I forecast is for this to go there just slightly higher. So this is where we'll put the maximum target. Okay, remember that when you do a scenario, you have to put maximum stop loss and maximum target at the context level. Okay, so this is where you have to put the maximum target. So if your trade is ever getting there, you have to take the gain. Okay, it's approximately there. It requires us to validate the bottom first, but the 127% is going to be the maximum target anyway. Okay, this is where you put the maximum stop loss, because otherwise the context is not valid. Okay, if you're breaking down the wave 2, it means you're wrong, and if you're wrong, you cannot hold the trades. So this is maximum stop loss. You cannot go further than that in your risk management. Okay, and this is, you've been taking care of context. You know you're trying to buy in that area, which is near the retracement Fibonacci's. Okay, so this is where you typically get there. So you should buy into 61 to 76.4% retracement, or expected target is right at 76.4, so this is perfect for us. Okay, now moving on to the local time frame, just to find out and assess the local technical framework. So as you can see, we're working around the B wave. Okay, this is what we've been working out. We've been working consolidation in here, and the B wave, as you can see, is making a sub-wave 4 structure in here. So from what I can see, this is what we're doing. Wave 4 in here, and we're searching for a slightly extended wave 5. We've already got sine wave bullish. The divergent structure triggered earlier, triggered in here, so this is nothing close to a bullish signal, to a bullish confirmation. So you can see the divergent structure triggered right here on that candle, and the cycle triggered right here. So this is not compatible for a bullish confirmation on momentum. So we're just having the bullish sine wave, and we're going to wait for a bullish extension to trigger a bullish momentum. And from what I can see, we're probably going to trigger a divergent structure. So I expect the price to go there, break down that level, which is a breakout level, and finding some support in here. The way I've been doing this is by putting, as usual, I'm not going to do it again, I just done it for the French users, but it's just done by using the fixed range as usual. Okay, so we've got support levels in here. I'm going to give you the prices, the exact prices. So we can go there and find some heavy supports. We've got two levels, which is right here, 18.66 and 18.63, and it's right next to the 76.4% retracement. Invalidation will be if we're making multiple candle closes throughout the previous low in here. So this is invalidation level, but for now I'm just waiting for the price to enter the speculative area. Okay, so waiting for the breakout to occur, and whenever the breakout occurs, I think the price will pretty rapidly go there, finding those support areas in which I'll search for intraday signals. Okay, so I'm only searching for a momentum confirmation at that point, as we're already bullish. Now moving on to the equity pricings. So same things goes with the crazy market. The VIX failed to make a new low yesterday, even though we've been making new highs. So if you're having a look at the SPX, we're making new highs. We failed to do it on the VIX, which means we've got VIX to SPX divergence, which means investors are covering their positions, they're not buying. So you really should be aware that risks is increasing whenever we have such patterns. The gold is buying again, the silver as well. So as you can see, yen is research, gold is bought, silver is as well. Silver is not that big of a deal. The junk bonds are trying to rise, but they fail under resistance for now. And this might be dangerous. As you can see, the yields have been dropping, so it means that we've had a lot of bullish demand yesterday. So bulls have been buying, but they've been failing, and this is important for me. It means that we have lots of stop losses right now available to take. We've got fresh buying entries that have been buying a resistance, and I like that. And I would like to see those stop losses taken down by the markets in a wrong footing kind of pattern. So we'll see if this is what's at play for the next following day, a kind of a brutal wrong footing market or not. This is up to see, but we've got it's like an highway to go to gold, to go to risk-off assets. I mean, we've got a straight line to go straight into flight of safety kind of trading. So it's just like we need something to put that in motion. That's the feeling I have right now. Wall Street's just waiting for something to do it. And for some reasons, not having this is just letting Wall Street going higher and higher throughout the earnings release season. So I think at some point something, even though it's earnings season, is going to work. It's not going to end well. And for some reasons, the market might be switching to panic mode at some point. This is what the VIX is suggesting right now, that we are peaking in terms of risk perception. And if we are peaking in there, means that anyway, even good news are not allowing to lower the prices of cover, which means investors are buying those covers. And if they're buying covers, it's because they are not that confident. People are trying to make you think that there are overconfidence in Wall Street and things like that. I think there is pretty much an overconfidence, but I think the danger is still the most probable scenario. It's just that we're waiting for this to be visible. I mean, Wall Street is in kind of a, okay, until you haven't proven me wrong, I'm going to keep on going higher. This is what Wall Street's doing. So it's waiting for the market to prove it wrong, and so do I. And I think this is where the next trading scenario is, by just waiting patiently to get Wall Street falling apart. And of course I can be wrong, because if nothing comes out and for some reason we keep on pushing higher with good releases, then I will be wrong. I will be taken down as a stop loss, and that will be good for the bulls. But I think buying right now is just totally out of any kind of risk management. It's just totally stupid, and I'd rather like not to trade than just buying. Okay, so if I have to give my stop losses, once again, I'll do it. I'm ready to do it because I'm a speculator and I'm no magician. I don't know what the market will do. I'm just assessing what I think is the highest probability for it to do. And I think right now what we might be expecting is a rising volatility, but we just need a market catalyst. I think at that point we've been overselling volatility yesterday, but after making new highs, which means at that point we may have bullish prices and bullish momentum. And from what I can see, that wouldn't be the best case scenario for Wall Street. It means something will go wrong, and if it goes wrong, first target is right here, and that's just the minimum target to me. It's retracing back to the first manipulation level, which is 21, which means that will be the third time in a row that the VIX is going to break new highs. But the problem is that at some point we could really go there, which is 31, and if we ever do that, nastier things are at play. I mean, if we're going 31, means that we're going to break a lot of supports, and Wall Street's not going to like that. Okay, so we'll see about this, but I think buying, for example, IG is saying buying Wall Street. Okay, so I think that's a sell signal. When they're saying buy, generally the market's doing the opposite. So we'll see about that. But if they're triggering buying scenarios, I'm pretty confident in the fact that something is about to go wrong with them pretty soon. So we'll see about that. Just I'm no magician. I don't know what is going to be the catalyst that could take down Wall Street. But all I know right now is that the more we keep on pushing, the more the risk is increasing. And from what I can see right now, investors are assessing that risk and they're not buying anymore. Or they are buying, I mean, at least they're not selling, but they are covering the positions, which means they're perceived as some risk in there. So at some point, this should be visible throughout the prices. It's just a matter of time. So I'm just patiently waiting. I know I've been doing this for 4 months, but anyway, that's how it is. I mean, patience is absolutely required, and moreover, when you're trading the time frames I'm currently positioning myself into. So the junk bonds, we have to talk about those. They're trying to break up. They've been trying to break up yesterday because of the positive day on US stocks. But from what you can see, it's nothing close to something bullish. It's just that we're working around this, which is bottom to bottom and to market top. So this is just a flag consolidation before getting lower. So I just think that that market is just patiently waiting, trying to get some stop losses, and anytime soon we're going to retrace to the downside. Of course, we're already having a bearish momentum. We're just waiting to have bearish prices. So as long as we don't break that resistance, I think we're just going higher to find some bearish demand volume just to get lower afterwards. So I think it's just pullbacking to get a lot of sellers. As you can see, that fake breakout suggests that we're in a range, but as you can see, the range structure is nothing close to bullish. It's a bearish flag that would generally exit from the bottom, and generally the waves that is the outcome is generally even brutal. It's generally brutal because when you consolidate by an ongoing pressure, this is what we call running flat patterns, and when you do those, generally the next wave is extended. So expect something pretty brutal regarding the junk bones, and if you take this in a daily perspective, we could eventually go there at least, not to say we could go there, and eventually in the end that could be the target. And if we go there, I mean, it's not what we're going to do right now. It's a long run, okay? We're pretty much zoomed out in a daily chart. So let's take the weekly chart instead. As you can see, if this is the major context, I wouldn't necessarily be surprised to go there. I mean, this is how the price we've had back in 2008, and this is what a crashing market pricings look like when it comes down to junk bonds. So don't be surprised if this thing had to fall apart. I would just say that the recession is down the road, just as I expect. It's just that for now, the market doesn't want to anticipate that. The markets just want to keep on seeing blue sky, where all the speculators are watching for clouds to form. This is my job. I'm watching at the sky and I see the clouds forming, but I still see Wall Street just burning itself down the sun, thinking that it's going to last forever. And so I'm just patiently waiting for the rain to come. I mean, it's just this. I want to be there before the storm comes out, and I want to be there to laugh at the bulls who've been staying in front of the sun for years. I mean, those who haven't gone out right now are going to take huge losses in the next couple of years. So if you're a long-term investor, this is pretty much the best time ever to take your profits. I mean, if you're waiting for others to do the same thing in the same time, means that you're going to get much lower prices. I mean, we're at the market top or probably near the market top. You cannot expect more than 2 to 3% upward moves, or let's say 5% on the most optimistic moves. So why the hell would you risk to lose 20% just to gain an additional 3%? I mean, when you already have hundreds of percentage of gains throughout the economic cycle, what the fuck is the goal to get an additional 2%, risking 20% drop? It really is the most irrational thing to go in here. I mean, if you zoom out the SPX, if you see this, if you've been buying right in after the recession, if you're buying the investment price, I mean, you've more than tripled the price. What the fuck would you keep on this? Would you keep this on going? What's the point? It's not going to go vertical like 2000s. It's like everyone is thinking that going out would be missing the biggest part of that rally. The rally has already gone in. It's too late. It's time to take the gains. That's it. If you're a long-term investor, just get out and be patient and wait for the next recession to get back into investment timing. And then after recession, you're going to buy the lower prices and you're going to get into a new economic cycle. That's how things works. And those who think we're going to go up forever and going crazy are the short-term speculative traders. And at some point, we're going to fuck them up. They're trading with tiny volumes regarding the long-term economy cycles volumes. These volumes are to the downside right now, and there are speculators who are thinking that this will keep on going forever. It's just long-term versus short-term trades, and from what I can see, every time that we have those kinds of battles, it's generally the long-term that's taking over. So you can try to keep on buying that shit forever, but from what I can see, bearish momentum is already in place. We're already ready to get into heading towards recession. We're just waiting for the signal, the price signal. So this is what I'm doing. The speculative indicators showing signs of nearing end of trend with a possible bearish momentum already in place. All we need right now is a price confirmation. So we need a trigger to just let the guys do the same thing. They want to see the candles reacting, and so do I. Right now, all I need at Wall Street is a confirmation, and I'm patiently waiting for this to come. but I'm not going to change my mind. I think right now we're still bearish. We're just waiting for that to come. Okay, so just understand me very well in here. I remain into speculative leverage because I'm waiting for a price confirmation. But anytime I got to get that confirmation, you can be sure I'm going to be shorting, and I'm not going to do it with tiny leverages. I've been waiting for this for months. I know that if it falls, it's going to fall hard, and it's going to hit brutally and take all the stop losses at once, which means I want to be there to reinforce the position really, really quickly. All those levels have been given in advance. We've got a support in here that I think is going to hold, which means I think that what we might expect is if we are picking up right here or near that area, it's a red area, so we can still work our way in there for a couple days or a couple weeks. It's no problem. I don't know how long this might take. It's just that I think that we're losing the momentum in here in Wall Street, and we haven't broken up the resistances, which means if we fail in here, it's game over for the bulls. And I think this is where the major support is. So I think we could do this, pull back, and then end of the world, taking all the stop losses. So we got stop losses in here, and obviously we're going to take those down. So I've got a reinforcement position right in here, another right in here, just to take all those fucking bull stop losses. They've been buying eyes closed, thinking this will go forever, and I think this is not the case. Okay, so I want to be there just to take their stop losses. And I think right here we've got pretty much a lot of stop losses, so I think we might require some kind of range action in here after taking them. So it's taking stop losses, working some kind of pullback, finding too much bears in here or too much bearish demand to retrace, so we're probably going to extend the losses in the end. Okay, so this is my scenario. As you can see, it's not that big of a deal. It's just that Wall Street is going to slowly fall apart and it's not going to provide anytime soon any kind of bullish retracement. I think that's a market that is just going to fall apart. It's going to retrace a bit, but anytime we're going to retrace, we're going to find so much bearish demand that the market will just keep on pushing to downside. So we'll see how this plays out, but if I'm right, once again, everybody's going to think I'm a god or whatever, and now when I'm wrong, everybody think I'm a stupid or idiot. So just get out of this. These are two radical emotions, and it's nothing close to what I'm trying to teach you guys out there. I mean, I'm neither a god or a stupid. I'm just a speculator. I'm doing my job, and my job is to anticipate what others will do before they do, which means high level of uncertainty. So I'm no magician. I don't think I'm smarter than others. All I think is that I might make more profits than others if I'm right. And I need to make sure I'm going to make less losses than them when I'm wrong. That's all I do. I mean, that's my job, managing the risks and having a tight money management. The rest is just the market choosing if I'm right or wrong. And it's none of my concern. I really don't care being right or wrong. All I care is finding scenarios that respect the framework I'm working with. Anyway, that being said, I think I've been covering up all the assets I wanted. We've got the gold and silver, just waiting for confirmations as well. We've got GBP, USD as well. We've been talking about those. So right now it's just trying to figure out what will be the thing that will just make Wall Street falling apart. And for now, it's just waiting to see this. As we had a pretty nasty signal yesterday, I'm going to show this one. It's not to scare you out once again, but when you see things like that happening on the biggest bubblish asset index, which is the NASDAQ, this one is pretty much the most bubblish stupid thing. Just have a look at this, and they think this is going to go forever. I mean, have a look at this. Do you really fucking think that we're going like 2000s? I think we're not. I think we're pretty much very late in terms of economic cycle. We've already had the pullback in 2016. Now we're just extending the final wave. We got the volatility back at play. It means generally wave 4. So it's sub wave 4 of a sub wave 4, which means we're wave 5 of wave 5. It's nearing the end, but everyone thinks this is going forever, like always. So what we have right here is not good. Yet we've made the highest historical close on the Nasdaq, but we've closed below 50% of that candle after opening with a bullish gap, which means we've been trying to get some momentum. We failed to have it. We pulled back during the day. So today is going to be needed as a confirmation. And if for some reasons today is just falling apart as well, it means that the bears are in control and that the bulls just lost it. So we'll see about that, but today is going to be an interesting session. We've got lots of catalysts, and I expect Boeing to be the big game changer today. We've got Boeing first, and then we're going to have Facebook. And those two are in danger, just to set things straight. I mean, Boeing has high probability to break down supports today, and that's also the case for Facebook. Facebook's at risk. It's nothing close to Netflix. It's one of the riskier assets that could, if the market is somehow disappointed, could go wrong, and it could go wrong pretty fast with nasty downward gap. So we'll see about that. I have no magic, but I don't know what the release will be. I don't know how the market will take it. So it's really right now speculative leverage is necessary because everything can happen, and all those giga caps can make crazy gaps that nobody on earth can be able to forecast unless you are an insider already having the numbers, and I'm not. All right, so moving on with the questions you might have left me on the previous videos. So thanks for your thank yous. I know the price will round up more than bleed off and have an extended winter and actually go lower than the current lows. You're talking about the Bitcoins, I guess. Then as it goes higher, what we'll need to do is invest what we're holding and make more profits. Yes, I agree with that, so we don't feel lost in fall of price when it happens again. I discovered a comment of someone giving accolades to Evan and also thanking him for helping me increase his portfolio. I don't really get that right now. I was skeptical beyond have made 8 times BTC into week with it. Okay, fuck off. You're just a fucking dream catcher. So did you take partial profits? No, I took entire profits. I'm out on Bitcoin, so I still have my wallets with some Bitcoins in there, but that's all I have remaining. I have those buy and hold Bitcoins, but I've been taking partial profits actually on those. I've been taking 33% off. So I've been taking gains on the Bitcoins as well, just to pay for the buy and hold. I mean, now I've been paying the stops for those Bitcoins, real Bitcoins that I've been keeping into the Ledger wallet, and I'm gonna keep those. Okay, those will remain mine, and they are not. I've been paid for it. Means that even if the price is going below 30,000, I've been paying for the stop loss, which means I can hold those in a real buy and hold, and this is what I just do. So I keep those Bitcoins. They are now mine, and I've been paying for the stop loss. So if for some reasons the bottom is already done, then I'm not going to run after prices stupidly. I already have Bitcoins, okay? But I still think we're going to go lower. So where do you trade and how to buy gold being European? But first, we've got multiple options. You can buy real physical gold, which I've been doing, and you can also buy digital gold, which is actually something quite different, and this is buying contracts, and I've been doing this with CFD contracts. So I'm a CFD trader, but if you're an American, you won't have access to CFD contracts. It's forbidden out there. So this is something that we can do in Europe, because this is the most convenient way to do it right now. So this is how I'm doing it. I still do have physical gold, but I also do have some digital gold in my trading portfolio right now. Yes, that's a possibility, but I think this is not how it's going to work out. I think obviously that the midterm elections in November are going to be the big game changer, and that we're going to change ahead of this. I think that the change, if it's not triggered by the earnings release or anything else, I mean, we've been piling up risks recently. We're going to do trade war, whatever. We still haven't got the China's response. And at some point it might come down, and it might not be pretty. As I said, the Chinese doesn't nearly have the same mindset as an American will have. I mean, you can take Trump, is like a raw redneck. It is a stupid guy, is just moving its fucking mouth and hands on the air. I mean, it's shaking here. That guy is just doing nothing interesting. It's just trying to do what it can with the big GDP of its country. I mean, it's getting there. It's playing good cop by cop. But really, do you think that the Chinese is that stupid? I mean, it's not to say that you can. It's not to be racist, nothing close to that. I mean, it's not just Chinese versus Americans. I mean, we're both humans. We're all humans. The thing is that you've got big trends in psychology, okay? And you've got the Western psychology, and you also got Asian psychology. And these are really two different things. I mean, an Asian person in general, and it's nothing close to be at a human level, at a single human level, you can never know. I mean, you're not going to be thinking like this because you're born Chinese. It's nothing close to this. I mean, if you're born Chinese into the US, you're going to have a US mindset, in US psychology, because you've been raised out there. It's nothing close to being in your blood, okay? It's nothing like that. But if you're born into China, you've been raised in that psychological element, background, and it induces the psychology you'll have, and that psychology is way different. I mean, Chinese are not the kind of guys who are going to shake hands in here just to be noisy for no reasons. It's nothing close to that. They already have a plan for sure, and they're just waiting to set it in motion. I mean, at some point Trump is going to go too far, and whenever it will do it, they will just simply trigger what they've been putting in plan, and things will get into motion, and you will never ever be able to forecast what's coming down to you. I mean, it's going to be a tough plan in which you're going to probably have to surrender in the end, because you will be failing. So I don't think trade war is going to be a win change for the US, even though all the US citizens think it that way. Even Trump is absolutely sure that this is what's going to be the game changer, that no matter what it's doing, it's always going to be the winner. I don't think that's nearly close to it. I think he's losing already, but he doesn't yet know about it. And I think this is going to be the game changer before the November elections. Because just to be straight, the Chinese doesn't want that guy in the White House for the next 4 years after the re-election. So they doesn't want that guy, and they just want to put it out. Just doing it by the November election is pretty much what they should do. I mean, to impeach Trump, you doesn't have much of a choice. You need to put the Republicans against him, which they want to do, but they doesn't want in the same time. They don't want that guy to be the running guy of the US. They just have no choice, because he's been the fucking elected president, and they cannot fight it unless there are two options. He makes some mistakes, so option number one, he makes a big mistake, and for some reasons is losing confidence of the citizens. I mean, if he's losing approbation of citizens, then Republicans are going to turn to him and they're going to impeach him. I mean, it's one possibility. Second possibility is keep on doing its shit and something bad happens. Means the Chinese retaliate, double down on him, and they take him down. I mean, if for some reasons the Chinese were about to fuck up the US dollar being indexing the oil, or for some reasons are about to fuck up the dollar out of international transactions, I mean, you're out, guys. You need to be aware of that. The dollar is going to plunge if that's the case, and everyone thinking the opposite way right now. Everyone thinks the dollar is a safer area in the world, and that no matter what, you'll have to buy dollar if things go dirty. Let me tell you something. I think this is not going to be the case if things have to go dirty. So either Trump is backing off with the retaliation he's been putting out there and the tariff things, and things cool down with China, and we can extend the economic cycle for probably 1 year ahead, and things will do right, or Trump is just keep on doing its shit And at some point, it's going to piss off the Chinese, and it's not going to do well because they already have in plan for sure. And if they put it in motion, you're not going to see that coming. And it's probably not going to be what you expect. So it's not going to be selling the T-bonds or whatever. This is too obvious. It's not what they'll do. They'll do something much, much, much deeper, much, much more complex. And it's something that you won't be able to figure out until they've been putting it in motion. Okay, because that's how a Chinese mindset is. They will have prepared for everything, and whenever they'll push the button, I mean, that's an image, but that's a comparison, but whenever they push the button, you're not going to see that coming, and it's going to be waves after waves of things hitting the US economy, and then you'll say, oh shit, maybe they had something to retaliate, okay, and maybe Trump shouldn't have been that hard on them. And at that point, I think you're not going to vote for that stupid guy once again in November. Okay, so this is why I think this is going to be, if it has to be down that way, I think this is going to go down before November. Okay, so be aware that I don't know about the timing. All I know is that we have precise timings, potential timings through time, and I think those timings are right now throughout the release. If for some reasons we've got disappointing releases in terms of earnings, could be a game changer. But the second thing is that trade war. It's been putting in the it's been put in the background for now, but be sure that it can become foreground any time. Okay, so it's just, once again, I'm not here to scare you out. I'm not playing with your fears to tell you that you should sell all you've got. It's nothing close to this. My message is just crystal clear. You need to assess the risks, which means that if you're all in with all your pension funds invested into equities, I think this is the highest danger you could have. We are pretty much facing great risks, and regarding risk, you need to manage your portfolio accordingly. It means that if you're just waiting for others to do the same, then you're going to do it late. So trade smart, take the money out partially, at least right now. Just take 30% out and you just let go for the rest. And if we ever have a deep and sudden pullback, then you'll get the rest off at lower prices, but at least you would have taken 30% off at pretty interesting prices. So that's all I'm saying. Don't really get out forever. It's just, first, don't fucking buy what Wall Street guys and golden boys are trying to sell you right now. It really is the biggest ever shit they've been trying to sell. They're trying hard, and so far it's not working well. So we'll see about that. But I think buying right now, worst option. Selling is optional, but not absolutely necessary. And if you do it, just do it partially. It doesn't have to go all in, shorting whatever you've been having. And for those who are trying to get into short speculative entries, needs to be aware that this must be done by professionals only. So if you're a beginner, don't try yourself into shorting the market. It's not going to work out that way. You're going to panic and take stop losses and things like that. It's not how you should do it. You need to have some experience to do it, and you be aware that you shouldn't be doing it with any kind of leverage right now until you get price confirmations. Okay? So now that being said, I'm going to leave you guys on this. Wish you a good day. Be aware that market catalysts like earnings release are things that you cannot predict unless you got the number in advance. And if you do have, then good for you. But otherwise, just trade safely. You know the market is going to gap up or gap down. So trade the long-term scenarios or the mid-term scenarios. Trade on the H2 time frame in which you can absorb all that short-term volatility. Please avoid trading anything shorter time frame right now. So don't take 15-minute signals. Even don't consider trading 2 minutes. It's going to be too volatile. We're trading long-term trends versus short-term speculators, and as I said, it's a big battle, and it's going to be noisy. It can take quite some time, but I think anyway the outcome is pretty much more bearish to me than bullish, but I could be wrong, as I don't have 100% chances ever. Bye guys.